111, 112 to the dollar at the moment, but it's on these suggestions, of course, that ministers may be drawing up plans to reverse some of these tax cuts, in particular corporation tax.
And that comes despite a spokesperson for the Prime Minister this morning, that the Prime Minister still rules out more U-turns on her mini-budget.
Bit of reaction from Shadow Chancellor Rachel Reeves, who said that reports of a potential further U-turn is a crisis, she said, made in Downing Street, and that working people are paying the price. So let's get the views now of a head of macro research at Accent Investment Managers, David Page. David, it's a bit difficult to keep up with the pace of change, both politically and indeed on the markets. As we say, the pound up and down, gilts looking a little bit better. But clearly, there's this huge dimension to all these political changes.
Yeah, absolutely. I mean, we started to see an improvement come through after the Bank of England's operations yesterday, but these rumours overnight and throughout the course of the morning that the government is working on a U-turn to these policies, which have fundamentally undermined a lot of faith in UK activity and UK markets, is obviously seen as very encouraging. So, it's only rumours at the moment. We need to get to the 31st of October. We need the Chancellor to present something that's credible for the medium term. Then we might be able to sort of move away from some of this this terrible period that we've been through.
I was talking with Liam Halligan just a moment ago about when you've taken a hit with the public on economic credibility, how difficult or otherwise is it to get back? What about the financial markets? When you take a hit with your credibility with you lot, how easy is it to get your confidence back? And why does it matter, actually, that your confidence is present?
Well, I mean, so financial market confidence in the UK government basically lowers the borrowing costs. So it lowers the borrowing costs for the government, but it also lowers the borrowing costs for UK households. And that's why normally you see governments proceed, with orthodox economic behaviour. And it will be difficult to get that back. I mean, certainly for this government, but also for the institutions of the UK. So firstly, we need to get a credible plan coming through first. We'll see what that looks like. Secondly, then we need to see if financial markets genuinely judge that the plan that's presented will lower debt in the medium term. And if that's the case, then they may well become more confident that we're seeing something that has a degree of faith to it, and therefore will lower interest rates. But there will be technical problems with this. I mean, the volatility that's been created, and your previous correspondent likened this to sort of 1992. I think it is a similar order of magnitude in terms of the impact it's having on financial markets. The volatility that we've seen in financial markets leaves a lasting picture. Typically institutions trade in safe products, and when you see a lot of movements like this, it dissuades them from holding those products, again raising the cost of borrowing. So that's really the importance of it.
Right. And of course, looking at 1992, then 2008, the Bank of England stepped in, steadied the ship. There are suggestions that perhaps they're not quite so steady this time round, and a bit of a blame game going on. The Bank of England pointing the fingers at the FCA and at the pension overseers and so on. Does that create in itself uncertainty in the markets?
Yeah, to some extent. I mean, the Bank of England's done a very good job of stepping in and trying to sort of cope with a difficult situation, and it moved quite quickly to alleviate the situation nearly a fortnight ago now. And obviously, we've seen a renewed pressure come about as it said that it has to wind down this operation, but has obviously put in place something else that it believes will provide liquidity to these markets. But yeah, the bank has the bank and the FCA have thoroughly regulated the banking sector since 2008. But increasingly, the bank has been worried that the job hasn't been quite as thorough for the non-banking sector. And some of the issues that are coming up today are from that. So we've seen a couple of reports to suggest that the bank will be looking into that in more detail. But fundamentally, what this reflects is a government-led shock, which has then had ripple effects through the financial market.